Thank you for joining Market News with Rodney Lake. This is a regular program for the GWII Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GWII Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, we have a special guest. It is one of our very own students, Laura Null, from the GWII Investment Institute and GWII School of Business and overall GWII. Laura, welcome to the show. Thank you for being on this. Such a delight. We are thrilled that you're here. We know that you're a senior and you're graduating this semester, so we're absolutely thrilled that you took the time to come onto the show. And you're obviously working with us this semester. We're going to talk a little bit about that on the show. But please introduce yourself more fully and let us know why, you were interested in finance to begin with.
Yeah, of course. Well, thank you so much for having me, Professor Lake. It is great to be here. I'm Laura Null. I'm a graduating senior here at George Washington University School of Business. I'm originally from outside of Philly, but I came here to pursue my degree with a major in finance and a minor in statistics. I've always known that I wanted to do finance. Growing up with a father in finance, Bloomberg TV was basically the soundtrack to my childhood. So this is about my first step to my Bloomberg moment here. But I love how everything can change at a second's notice. Like being able to figure out what to do every day, depending on whether the market's up, whether the market's down, really like that chaos drew me into trading. So when I got here at GWII, I immediately got involved with the GWII Investment Institute because early on I wanted to not play on a simulation or play on my computer. I wanted to be able to have real impact with real money, with real consequences. So that was extremely fantastic that I got to get involved with that so early.
Excellent. And so we're going to talk about you're working on an independent research project for us this semester, so thank you very much. But before we get into that, you've been involved with the Investment Institute for a variety of different things. One is the stock pitch for your class. Could you talk a little bit about that for us and maybe some of the takeaways from that class? So for people that are watching that are maybe interested in our classes or a potential student who's interested in taking one of our classes, could you give maybe the highlight reel of your experience?
Yeah, of course. That was honestly one of the most rewarding classes I've taken here at GWII. Probably the most work, but also the most rewarding. But I took the Applied Financial Securities Analysis class spring of my junior year. And honestly, I got like the exposure to the real work that I knew happened, but I never actually been able to do. Like working through Excel financial modeling, working through DCFs and being able to put it together into a stock pitch was something that I knew I had to do eventually, but I never actually been able to do it. The other big key takeaway is like learning how to fundamentally analyze a company and come up with an investment thesis. I remember so many times that Professor Song would always tell me like those risk factors, like those are idiosyncratic risk factors. And I was like, I don't even know what that means.
Nice.
But I realized a lot of things that people say a lot like that are normal to the whole market, that doesn't really matter when you're talking about individual companies and when you're talking about an individual portfolio. So it really shifted my view on how to analyze companies, but also it shifted my view like professionally on how to be able to put together materials and just be able to like conduct professionally in a financial environment.
Well, I think that's great overview. Shout out to Professor Song there. Thanks very much. And the reason I'm asking is because, students come through our classes and I just wanted to hear from a student, what is your takeaway? So I think that's wonderful to hear. That's obviously what we're trying to do is to instill those skills and those techniques with our students. So this semester, shifting gears a little bit, you're working on a project with us that's around risk and analytics. Could you talk a little bit about that?
Yeah, so once I finished that class, I really saw an opportunity for myself to kind of delve into a little bit more deeper of the details of the student funds across the board. I was, thinking, wow, we got, from 1 million to 10 million. That's great, but how do we get from 10 million to 100 million? That's our next biggest move. And in my mind, I saw it.
Thanks for saying that, by the way. That is the goal.
Of course. In my mind, I saw it as like how we were doing it with the students was a really big risk factor.
Mm-hmm.
And throughout the semester, I've realized that that's not our biggest risk factor. Like that's how we got here, and that's what's going to take us home. So I think that was really interesting. I've kind of just delved into a lot of different risk techniques from, derivatives to cash and also just like fundamental analysis.
Excellent. And so, we talk about risk, and you mentioned a little bit about the way that the portfolio is constructed, and we'll get a little bit more into that. And now you're seeing the market really be all over the place. And so it's mid-April. When we're recording this April 22nd. And so this, as I mentioned in another episode, could be ancient news by the time this actually gets aired, because the market has been, all over the place and has such big moves, and people are paying attention. Now you have the IMF and World Bank meetings happening right next to campus, and we can talk a little bit about that. But, from your perspective, what do you see as the things that, we should be paying attention to? What do you see as, the overall market risk from the perspective of a long-term investor?
Yeah, absolutely. I mean, more than ever, it's a constantly changing market environment. For me, the biggest thing is to be able to decipher between what is short-term noise and what are long-term trends. So the tariffs dominate the headlines every day, and it seems like a lot of everyday investors are starting to panic. Like just this morning, gold hits the brand new historical threshold of 3,500 an ounce, which is crazy, since I felt like it just hit 3,000. But
it's still on the move for sure.
It shows that people don't know what to think. However, on the flip side, the market is still showing that it's resilient. So no one can accurately predict what's going to happen next. But definitely the one thing I can say for sure is that it's going to be a volatile market. And what we're trying to do here is avoid the emotional decisions.
Absolutely. So one of the things that we're always trying to train our students is, how do you think about the good news? How do you think about the bad news? The market's always forward looking. And for us, we're absolutely thinking about, the next 5 and 10 years. I mentioned this on another episode, is that, for an institutional investor, so students are managing our portfolios for not the next day, not the next week or the month. It's really about where should we position ourselves in the next 5 and 10 years. Could you maybe talk about, the forward-looking aspects of the market, and maybe talk about, the bad news, the good news, and everything related to that?
Yeah. I mean, there's a classic phenomenon that the markets move ahead of the news cycle. I think a lot of people don't realize that by the time that the news already hits, a lot of those things are already priced in, because people try to predict that to get ahead of the curve. So obviously the markets are forward-looking. S&P 500 and NASDAQ posted big gains recently. Even though there's headlines from tariffs, inflation, geopolitical risks, investors are looking 6 to 12 months ahead. So they're thinking about the future earnings growth potential. They're thinking about policy shifts. They're not really thinking about what's on today's headline. So sometimes that means that bad news can be good news. Sometimes even negative economic data, which we just saw, like weaker job numbers, slowing inflation, can actually fuel rallies, because investors try to anticipate, obviously, what's the Fed going to do.
Right.
Obviously, the Fed is having a lot of pressure now from the Trump administration to cut rates. When we saw disappointing retail sales numbers, that somehow still led to a big surge in tech stocks. As traders, tried to anticipate what was going to happen next. They had tried to anticipate that the Fed was going to cut. Who knows? Obviously, that's still definitely up in the air. And that has raised a lot of there have recently been concerns about the Fed's independence, but most likely that it's not going to be a real threat to the Fed's autonomy overall. Most people expect that the Fed will wait for clear signs.
Right. No, and that's important, and it's important to mention. And it's not unique to our central banker here. And just today, Christine Lagarde was talking about this, that central bankers get political sort of pressure, right? Because it is many times that people want lower rates for a variety of different reasons. And so in this case, no different here. But Jerome Powell seems pretty steadfast, waiting, being data dependent, as they talk about at the Fed, for those things. And so we'll see what happens, obviously, but it seems like that is the case for the moment. So those are all excellent points. And so one of the things that, we think about is, risk management with all of our portfolios. And we talked about that. Could you maybe talk about some of the specific strategies that you've been using to analyze the risk around our portfolios?
Yeah, definitely. So as I stated, when I first started, I was honestly pretty scared. And there was only one thing on my mind: diversification. And I was focused on spreading our exposure so thin so that when all these headlines hit and the big news hits, we're not having any drastic moves. But as you taught me, and as many people have taught me, diversification is not going to get you anywhere fast, at least.
Well, it's hard to outperform if you're overly diversified, is some of the things we talk about.
Right. And so as what you said is nobody's getting rich by being a closet index. So at the Investment Institute, we're still very much in the aggressive growth stage. Again, getting from that 1 million to 10 million was great, but for the next 10 million, we're going to really try to lean into trading our view. We're not going to over diversify. We keep under 50 holdings. We don't have like certain position limits, but we do lean into sector trends and we really lean into the trade that the student wants to trade. And so we're not going to like lean away from that just because we want to diversify because of uncertain times. Mm-hmm. But that doesn't mean that we're not analyzing in the background.
Right.
That's part of the class, doing scenario testing, doing stress testing. What happens if the tariffs escalate further? How is that going to impact us? We might not be concerned with short-term noise, but there's definitely, medium-term impact that could have a lot of significant impact on some of our holdings that we need to think about. The other big thing that we're thinking about is liquidity. As a fund that has to have a payout, we really want to make sure that we have enough cash on hand that we're not selling at the wrong time.
Very important.
Very important. And we're not selling at the wrong time because of an emotional move. We want to make strategic moves, and we make moves when there's a clear evidence of a breakdown in our initial investment thesis.
Right.
And that causes us to, rethink our position and potentially trim or potentially increase off cycle. So we're definitely monitoring the impact in the medium term pretty closely and just trying to avoid the day-to-day trade.
That's fantastic. And want to say thanks for doing all this work on the risk of our portfolios. And we really appreciate that. You mentioned something that is really core to what we do. One of the things that we talk about is, we don't want to be overly diversified. And when we find great management teams, when we find great businesses, we want to let them work. And we want to, let them reinvest that capital, the so-called let the winners run type of strategy. Could you maybe talk about, the risk associated with this or the lack of risk associated with this, or how people might think about this? Because some people would look at our portfolios, and maybe even you initially, and you look at this and you think like, wow, that's a really big position in NVIDIA, in Apple, in Microsoft, and some of these bigger tech names that, really it's a consequence of not at cost, but really as these positions have grown, it's really from the growth in the investment. Now, we've been very reluctant, as you've mentioned, to trim these names, because, our feeling has been that, okay, there absolutely is risk to being concentrated, but there's also risk associated with being too diversified. Could you maybe help us think about that from your perspective?
Right. Yeah. So as you said, the first thing that we want to teach students is how to build wealth, not to preserve wealth. And we need to preserve wealth only to sustain our operations. But on the other side, we want to be able to build wealth, and that's through outperforming. So we're really looking for companies that can lead to compound value. We're not going for the big dividend yield companies because that's, again, not part of our aggressive growth strategy. We're looking for companies that can compound just like we have. We've compounded 14% annually over the past 10 years, and we're looking to do that again. We're looking for companies like Amazon, who instead of paying out really big dividend yields, are putting that back into the company, because even though you think Amazon, obviously, like, great management, great business model, great balance sheet, you would think that they could then pay out dividends, but what they're doing is reinvesting into different parts of the business that you don't even see.
Right.
And that's upcoming and get compound growth even further, even though right now we think that's one of our biggest winners. They even have a lot more room to run.
Yeah.
So we're going to let those winners run.
No, I think that's an excellent description. And I think Amazon, I was just recently talking about that on another episode, is that, and we talked about Amazon on a few different episodes, to be clear. Again, not investment advice, everybody. But I think that's a great example of, at scale, do these companies have these reinvestment opportunities? And when you see those, for us, as you mentioned, what we're really trying to do is grow and build the wealth of the portfolio, because that's what supports operations. And so if we can support more students, that's fantastic. And that's our goal. And it's also our goal to train students to outperform. Part of that reason, and just to maybe put a soundbite in here for everybody, people that are listening or maybe watching on YouTube, thanks to both groups, why do we want to do that? Well, I think it's really easy to train students to be the benchmark. They can buy the benchmark, and that's great. And if that's what you want to do, even Warren Buffett talks about, look, if you're not willing to do the work, that's a great approach.
Right.
Buy the
Right.
index, Vanguard, the VOO, we don't get anything from Vanguard, although if you would like to be a sponsor, let us know, Vanguard. It's really easy to do that. It's really cheap. Right now, 3 basis points. Some are even free from Fidelity, also not a sponsor. But that's not what we're training students to do. We're training them to say, hey, look for these opportunities to outperform, and that's where we can really grow the wealth of the setup. So I think that's super important, and I really appreciate that you mentioned that. And so again, just wanted to make sure that people understood sort of the emphasis there, and that's why we let our winners run, because we think that there's the opportunity to outperform, there's the opportunity to build that wealth, and I think you described it very well. So thank you very much. So up next here, let's talk a little bit about, you've studied a variety of different things at GW, obviously finance being at the core of that. Could you talk about sort of maybe how some of the other coursework that you've done, including some of the Investment Institute courses and the projects that you've worked on, has helped you shape your understanding of risk management, especially as it relates to a portfolio?
Yeah. I mean, definitely. I started off with the Applied Financial Securities Analysis class, and that really like jump-started my spark to be like, oh, this is real, not, when I graduate, but this is real right now.
Yes.
So after that, I got involved with the quantitative investment project.
Yep. Thank you.
That was really fun. That showed me like a whole different side of things. That showed me how all of this trading can run through computer algorithms.
Right.
I ended up sitting on the algorithmic trading desk for my internship.
Nice.
I never even would have known.
Excellent. Great experience.
Then after that, I get involved with the financial derivatives. To be honest, I really didn't know a whole ton about derivatives. But Dr. Young, I took his financial derivatives class,
Nice.
futures, swaps, options. I moved on to then take his graduate level class this semester in options, which also was part of the reason that I wanted to do this whole independent research project, because I saw all of the things that he was teaching us, which was like the coolest thing I had ever seen.
Nice.
And I was like, I want to do something like this that's not just a textbook problem where the portfolio isn't, just
paper
equities
portfolio,
and bonds, or the A and B portfolio combination. And I was like, well, I could really take this and I could really do something, across the board with the Investment Institute. Will that play out? Who knows? But that was kind of like my playground for the whole time, to be like, this is real money, and I'm gonna take all this stuff that I learned, even about derivatives, which we don't invest in derivatives currently. I was like, where are the potential growth opportunities for that? Are there growth opportunities, or should we not do that?
Yeah.
Either way. But I just saw that as like a whole new layer that you could add into the risk management aside from just buy, sell, pitch. So that really, showed a whole new world of finance to me.
Excellent. And, taking all that, together, could you maybe talk about sort of like the holistic approach to risk management that you received from your time at GW, and what would you emphasize, to people that are watching and people that are listening for the show? Yeah.
I think, just as you said, it's a holistic approach. It's not just one checkbox. I have to do this. I have to diversify to 40 holdings. I have to have this much cash. And like, it also is very personalized, is what I learned. We're not a retirement fund, but if we, later down the line, my risk profile is going to drastically change than what it is right now.
Correct. It depends on the client, depends on if it's your own money, your own circumstances.
Exactly. So risk management is not just one thing, and it's not just one checklist. It really depends on what your profile is, what you want to get out of it, and kind of like how much work you're willing to do, but also like how much you want to see at the end, So I think it shows that like a lot of people say, don't have overconcentration, but that worked great for us.
Right.
We are very overconcentrated in tech, but a few years ago, people would have said, well, what are you doing?
Right.
But that, showed us 14% annualized return. So
yeah, and I think you're making an excellent point here, and I think people have to pay attention to that. And I think that's a good takeaway, is that risk management is different things to different people. It depends on your client, if you're managing client money, and what their objectives are. And if it's your money, it depends what your objectives are and what your timelines are. And so I do think it's really important when you say risk management, it's not a one size fits all. It's not that these risk management metrics are suitable for everyone under these same conditions, because people's conditions are different. Their objectives are different. Their timelines are different. And so it really depends, right? To use a lawyer answer or an economist answer, but it really does depend. And I think that is good lessons learned to talk about that. Now, speaking of lessons learned, so we're getting close to wrapping up the show here. One of the things to add, we'll ask you at the end, so start thinking about is your only at GW moment. But before we get there, maybe to wrap up this part, is to talk about lessons learned and what you can share with our viewers, our listeners about all the work, again, that you've done. You're graduating this semester. I'll be the marshal at the business school ceremony, and then I'll be on the mall to celebrate you with you as well and all of our other graduates. Congratulations.
Yeah.
But maybe, you could pull together, maybe not everything, obviously, but pull together what you think are some of the highlights of lessons learned, not just with risk management, but investing, finance, as you close out your time here at GW School of Business.
Yeah, definitely. I think my biggest takeaway that could go for finance, it honestly could go for life, is have a view. Have a view and actually do something about it.
Right.
Have a view and have a strong conviction for that view and be able to explain to someone why all of your strong reasoning behind it, and then do something. In finance, it's always the worst thing is, oh, I thought about that 5 days later, published in the Wall Street Journal. Now everybody knows.
I didn't do anything.
I didn't do anything about it. And that's what really gnaws at you.
Yeah.
So I think being able, especially as a young person, when sitting as an intern on a trading floor, everybody gets the exact same news. Everyone gets, all the headlines instantaneously. Everyone knows everything you do. The only thing that you're bringing to the table is your view. So just hold on to that view and trade into that view. I used to get nervous and be like, oh, well, I don't know. Maybe we should, hedge against that.
Right.
But people are like, why? Then theoretically, then you're cutting into your own money because you're trading against your own view. So I think just being able to really...
So have the courage of your own conviction.
Right. And formulate it and then go for it. I think that we have, as young people, we have a lot of time to recover from mistakes, but we don't have time to recover from missing out.
Excellent.
So.
Yeah, right. The heirs of omission, as Buffett and Munger talk about. All right. Now, last piece of advice, and then we're going to go on to your only at GW. What advice would you give to future students coming to GW to study? So anybody that's listening or watching to the show, and maybe even a parent thinking about they're sending their child here, their child is son or daughter is here at GW. What advice could you say? Hey, these are some of the things that you should be paying attention to while you're here.
I think the biggest thing is getting involved early, especially for finance students. It is getting earlier and earlier and earlier. It's almost it's basically like sports recruiting.
It is like recruiting out of high school.
If you want to go to a big bank, you have to start freshman year. And I think I only really realized that going sophomore year, which thankfully, 2 years ago,
early enough,
which 2 years ago, that was fine.
Yeah.
But now, if you don't know freshman year,
tougher.
You're going to miss the whole ball game. So I think getting involved early, even things like the Investment Institute Portfolio Group, you don't have to take one of the classes, but you can get involved. You can learn about things. You can do a stock pitch, and then you have something to talk about in your interview. People don't get involved early. You don't have anything to talk about, And I think the other thing with finance is really just trading into your view, but trading into your view of yourself. We're going to let our winners run, but if you think that you're a winner, you really got to let yourself run.
Yeah.
So I think...
Well, those things are both excellent advice. Get started early and bet on yourself.
Exactly.
And be highly concentrated with that view.
Exactly.
All right. That was really fantastic. Thank you very much, Laura. So to wrap here, you've given great advice and worldly wisdom. So to wrap here, please let us know, what is your only at GW moment that you could share?
I think my favorite only at GW moment, as you said, IMF meetings are happening right now. And I get to go later in the week to almost as many as I want.
Excellent.
Which that never happens.
Right.
Being able to be a student and sit in, a conference with world leaders just right next to you, that doesn't happen everywhere. That happens actually nowhere except for here.
No, it's right next to campus.
And being able to go multiple years in a row and sit in on central bank meetings, that's unparalleled.
It is a really fabulous opportunity. And I'm glad that you took advantage of it. Not everybody takes advantage of that, but it is absolutely a place at only at GW, where it's literally right next to campus. You walk across the street. The traffic happens to be really bad today as a result, so the meetings are happening. But it is a great advantage for our students, and I think it is a great opportunity to take advantage of. But to your point, you got to go out there. You got to have a bias for action, so you got to go take advantage of those opportunities. Glad that you're doing that, and glad you already did that. Great advice for everybody. Thank you so much, Laura. for the time on the show. Thank you for all the work that you've done for the Investment Institute. Congratulations on graduating from the GW School of Business and GW more broadly. I look forward to being your marshal for the business school.
Thank you.
And I look forward to seeing you on the mall for commencement.
I look forward to it.
And that is a wrap for Market News with Rodney Lake. We'll see you back on the next episode. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.